Hello dear traders. For today's update, I decided to cover the USD versus Japanese yen and the gold that we spoke last week. So basically the USD versus Japanese yen achieved our upside target and basically tested the zone at 109.85, exactly like we spoke about in my previous analysis and update. So we achieved all of the upside targets. But the thing with the US Japanese yen, what I want to cover this morning as well, is that there is a still potential from my perspective, for another upside move. And I will show you and explain you that watching this 2-hour time frame on the USD versus Japanese yen. So if you check this a 2-hour time frame, you can find out basically that the price tested the recent swing highs this morning and during the Tokyo session. We revisited the previous swing highs at 109.30 and then found aggressive buyers from there, which is a pretty good sign that there's still lots of the buyers in this market, and the USD Japanese yen can still go higher. Now, I will take this polyline and show you that this can be actually completion of this ABC downside correction for at least another attempt higher. Right? And this will lead us for potential revisiting of this zone at 109.85. And we can try to play for intraday upside movements and potential for revisiting on that 85, which is actually 30 pips away from the current price. There is that gap of 30 pips for potential intraday play. But even if you think about swing targets, if you think about what is the next level, if we break 109.85, and you will find out basically the next levels and the very important pivot levels based on the daily time frame. They are set all the way up at the 111.40 and 111.50 zone. So it's a far away from the current price. So there is a even bigger potential if we, in case of the breakout of 109.85. So definitely watch for upside opportunities, and short term for retest of the 109.85, but the potential for the midterm targets all the way up to the 111.40 and 111.50 zone. Now, if you play for this intraday opportunity, then obviously your stop can be placed at the pullback low, so around 109.35. You can place stop loss to be around 20 pips or so, and then try to see if we can retest the high at 109.85, or even try to play for a longer term a bullish entry. And the next one is basically gold chart, which is still inside and trading inside of this trading range, right? Between the 1719, which is the bottom of that trading range, and the top of the trading range is the 1755. So I'll say there's still no clear situation here. It's a pretty flat, but why I'm posting you this is to watch for the breakout. So definitely you can put this and mark like it's a trading range, but to put if we take the low of 1719, probably this can lead us and open the door for test of the 1700 zone. So in that scenario, you can watch for a downside breakout, some rally back, and then for a potential for the sell side with a target with a 1700. So that is a much probable scenario relative to where we are trading right now versus to break the high. So watch for that potential scenario and then watch for sell in the rallies.